JC Parets is the founder of StockCharts. He's launched it a number of years ago and has grown it into a very successful research business, advising some of the top investors on the street how to use charts as part of their process. He's a self-proclaimed John Murphy disciple, a big fan of intermarket analysis, who had a mutual interest in intermarket relationships. I enjoyed sort of unpacking some of those themes with him, in particular what his routine was like for actually going through those intermarket relationships, which certainly are fluid. They evolve over time. And so having a good awareness of where those things are moving can be very, very helpful. Part of JC's background was with financial media, so it was interesting to think about how he viewed financial media now being on the other side of things, now being interviewed as opposed to running his own financial show. So it was actually a lot of fun to think about how his process had evolved from hosting a TV show to running a hedge fund to writing research to writing blogs, and where he's at now with StockCharts. So here's my sit down with JC Parets of StockCharts. Hey everyone, we're here at the Traders Expo in Las Vegas, here with my friend JC Parets, founder of StockCharts. Thanks for sitting down with us, JC.
Of course, anytime.
Appreciate it. Good to see you, my friend.
Likewise.
So for those that don't know who you are, which I can't imagine that's true because you're super prolific in social media and you get a lot of content out there, how did you get to this point? What's sort of your general background? How did you get to this point where you're driving StockCharts?
Well, I grew up in Miami, Cuban parents.
Yep.
I was first generation born here, so I played baseball. Right, it's kind of like it's like a thing.
Obviously.
Okay.
Good.
I was pretty good. I wasn't so great where I was, getting drafted and stuck in the minor leagues for a bunch of years and wasting my life. Fortunately, I was just shy of that, so it kind of got me into a better school, baseball.
Yep.
I went to Fairfield University, right outside New York City.
Yeah, sure.
So my internship interview at Merrill Lynch was a joke. It was more of like an introduction than anything else.
Yes.
So that worked out well. And so that really kind of opened my eyes. Prior to that, I just wanted to play baseball and organize parties.
Yeah.
Like college kid, right?
Why not?
Yep. Why not? I went to school because I had to, because otherwise I couldn't play baseball, right? So that's really when I started taking things more seriously. And I was like, oh, wow, this market thing is cool. I was always attracted to math. Like I was good at like algebra and geometry. And then like after that, it was way too complicated, right? So like I just like stopped learning at that point, which as a technical analyst, like it makes sense. Like we don't have to overcomplicate things. Good, because I don't really know how. So that worked out well.
Right.
So anyway, so I'm interning at Merrill, living in New York City for the first time, 21 years old. Best summer ever, obviously.
Perfect.
Fantastic. Everybody around me is also interning, whether it's in finance or in fashion or marketing or all sorts of stuff. As you could, it's New York.
Yeah.
One guy was trying to be a chef, right? So everybody's kind of like, everyone's from all over the world, similar minds. We've gone out of our way to get a good learning experience and everything like that. Everyone's the same age. So that was really cool. And then, got into the street, right? Started working at different brokerage firms, I did investment banking, trading, private equity. I managed 2 different hedge funds. So I kind of worked my way, but technical analysis was really the common denominator along the way. Because when I first started, I was 22 years old, right? And I'm like, trying to learn as much as I can. And as you know, right, as soon as you start learning, you realize you don't know anything. Right? The more you learn, the more you realize how little you know. So I'm looking around and I'm reading books and I'm trying to learn as much as I can, right? 22-year-old kid. And there's people like twice my age, 3 times my age, who really felt that they had a handle on the market. And it was just very obvious to me that they didn't know anything, right? And it just scared the hell out of me. So I was like, all right, so do I, study for my CFA and learn about fundamental analysis and learn about companies? Or do I study for my CMT and learn technical analysis and learn about stocks?
Got it.
And, in hindsight, what a great decision. But like at the time, I was like, I don't care about companies. I care about stocks. Done. We're doing this. We're going this way. Right. And then in hindsight, like little did I know how important that decision would ultimately be, like in my life, career, right? Of
course. Yeah.
So, a bunch of my friends had blogs. Like this is like 2009, which is the beginning of the financial blogosphere, Zero Hedge, Business Insider, right? So like some of my other friends are starting blogs and they're like, well, why don't you have a blog, JC? And I was like, I don't know. I don't really know how to do that. Like, Right. And they're like, we're going to build it for you. Don't worry about it. Phil Perlman.
Yeah,
like, don't worry about it, JC. We're going to build it for you. He like designed the logo like that night. I think it's still the logo maybe. And like next thing I know, he's like, here's your username and password. Go. I'm like, all right. So this is like 2010.
Got it.
Right?
Yeah.
Compliance was a huge issue. Like at first I used to have to send blog posts to my compliance officer.
Oh yeah.
And then like after a while, he's like, you know what, just publish the damn thing. So this is like 2010.
Yeah.
Right? And then literally just months after I published the blog, I started the blog, I'm getting calls from everybody, right?
Right.
Bloomberg and Fox and CNBC and CNN Money. They used to do like videos and Wall Street Journal. And they're like, hey, JC, come and talk about your charts. I'm like, yeah, sure. I got nothing else to do.
Yeah.
You know, I'll go talk about my charts. Next thing I know, I'm like hosting TV shows and stuff. So what was cool about that experience is that it really kind of taught me, I really saw the way the sausage is made in the media, right? I see why it's more of a distraction than a source of information, right? Like it's their job to distract, it's our job to ignore, right?
Yeah.
And that was such a great lesson because I literally saw the way the shows were made because I hosted the damn show. So we'd get like an email in the morning and it would be like A block, B block, C block, D block, E block. And then like throughout the day, we'd get other emails and they'd be filling it in with a bunch of nonsense. Like, hey, GE reports earnings. We need a bull and a bear. Who wants to take it? It's like, what? Right? And it's like, well, JC, what do you want to talk about today? And I'm like, well, soybeans are really ripping. I'm like, how about Apple? What do you think about Apple? You know, so I really got to see the way it was made. And it really kind of just reiterated. By then I was already a CMT.
Okay.
I had already started learning technical analysis. You know, I had already been in practice for a long time.
Got it.
Successfully traded through 08. Because I completed my CMT on 08.
There you go.
Like,
good timing.
Oh my
Decent
God.
timing.
If I would have waited one more year, we would have been here.
That's right.
Zero chance. So the blog was just an outlet for me to write.
Okay.
Which I recommend for everybody. I know you're not going to disagree.
No.
Write. Whether you publish it publicly or not. Just write your ideas.
Just get in the habit of doing that, right?
You know, number one, it's very therapeutic because it forces you to really put your thoughts down on paper. And then what's even cooler is that you can always go back and see what you were writing when. Be like, the market really had a big turn. You know, bonds shifted, stocks shifted, commodity shifted around this month. Let's see what I was thinking and saying. Right. Why did I miss that? Or why did I get it right? Both ways, right? So I recommend everybody do it. So anyway, I'm doing it. Very selfish endeavor. Just, I think something's cool. I'm going to write
Put it
about
out there.
Whether other people thought it was cool or not, wasn't really the point. Now, much later, now I realize, okay, write what people are interested in, JC, and they'll read it. Nobody cares about soybeans.
There's a lesson there.
Whenever you want to write about soybeans, write 2 Bitcoin articles instead. But at the time, that's really just what it was. And then and then I see the traffic and all the traffic. I'm getting traffic from 100 different countries. I didn't know there were 100 countries. So I can see the traffic coming in every day, and I'm like, whoa. I got 3 people in Sri Lanka that like my Apple post, right? So that was cool. So I'm getting emails from like, now I start getting emails from like financial advisors and professionals. I'm like, JC, how come you don't have something more consistent that we can purchase? Because everything else out there is crap. And I'm like, I don't know. And then I was like, nah, I'm not going to do that. I'm just going to raise $1 billion. Right? I'll be the next Carl Icahn. Whatever. I don't need
How'd that go?
I don't need to sell research. Fine. So anyway, so I'm in that grind, right? You know, we hit, 10 million. It's like, all right. We're a couple more zeros and commas. Right? And, owning a GP is not fun. It's expensive, all these things. So finally, some friends of mine were like, GC, we'll sell it for you. Just send us the PDFs of the charts. We'll take care of the rest. I'm like, fine. So I was like, see if you make me a few bucks. And they did. So I was like, whoa, what am I doing? So at that point, all the time and effort was on the hedge fund. All of the revenues and zero effort was on the research. And it's like, this
doesn't
I'm
add
no
up,
genius or nothing, but this doesn't make any sense at all. What am I doing? So I told my girlfriend at the time, my wife now, I was like, let's get the hell out of New York. Let's move to California. We'll move to wine country. I'll put my head down. It was just a product at the time. This was in 2014, 2015. It was just a product, and it was just a blog that turned into kind of a crappy product. Or like an incomplete product, I should say. Nothing I would be proud of today. At the time, I was like, whatever. And I was like, we'll turn a product into a business. And that was 4.5 years ago. So we're still in California. And it's great. I get to talk to literally the biggest and smartest investors in the world every day. Whether they're clients or colleagues like yourself. And we have a lot of the same friends.
Of course,
the same conversations I'm having. Like, how is that not an advantage to us?
It's pretty good. Well, congrats on your success so far. I mean, it's been a pretty impressive run
thank you.
From the outside, seeing what you're doing. Can you talk a little bit about your process in particular? Do you have a regular routine? I mean, you strike me as someone that's looking at a lot of charts, and the best analysts I've ever coached or known look at a lot of charts.
Yeah.
So how do you go about it? Is there a regular discipline? Is there a regular daily, weekly process that you do to kind of absorb all of this and kind of make your decision? Walk us through a little bit of that, if you could.
Yes and no.
Okay.
You know, we look at about 5,000 charts a week.
Okay.
The order changes based on, like if I wake up on Saturday morning, I'm going straight to those international weeklies. Like just, I can't help myself. Like even if I know there's something, nope. I love going through every single country in the world on a Saturday morning with my coffee. You know, waiting for football games to start, drinking my coffee, going through charts, right? From, you know, from Canada to Japan to Sri Lanka to Chile, and everything in between, right? So I really enjoy it. And then sometimes it's just super selfish. It's like, you know what? Bonds today. We're doing bonds, you know? You sometimes sometimes you're in a bond kind of mood, you know? Or sometimes it's like, oh, let's go, you know, the dollar's making crazy moves. Let's dive into currency. So I have like workbooks with like, you know, I don't know how you set up your workbooks, but I have workbooks with all the currencies. I have workbooks with all, all the sectors, all 30 Dow components. I have an intermarket workbook where that might be my favorite. My favorite changes a lot. Depends where you catch me. But I like the intermarket work a lot. I'm a John Murphy disciple through and through.
Got it.
It just makes sense. You know, a lot of times you're going to get so much information. I know I'm preaching to the choir. You're like, I hear you. Get so much information from other asset classes, you know, and then also you might get a trade right or a directional call right in one asset class, but the risk reward is better in another. I'll take you back a year to the fourth quarter last year. You know, I was end of the world bearish, and I went from like super bullish all year to end of the world bearish. First week of October, I'm like, everything's broken, short everything. The ego trade in October through basically the whole fourth quarter of 2018, the ego trade was to short stocks. The easier trade was to buy bonds.
That's right. It
was a much cleaner, from my perspective anyway, it was a much cleaner risk versus reward opportunity buying bonds than it was shorting stocks. So as bearish as I was, and I'm like, oh my God, sell everything. I just shorted single stock. We were talking with your friend Todd Gordon earlier this evening and talked about that same thing, talk about sort of the Murphy approach to intermarket analysis. And a lot of times it's so easy to get caught up into the signal in a specific chart that you forget to think about if you're looking at the right chart in the first place, right? How is this related to all the other levers that you could pull? So how do you tend to think about equities versus other asset classes? Do you have a way that you tend to compare them, and you have a process for sort of absorbing that sort of thing? Well, so because of my job, right? A lot of people come to me for equities, right? You know, it's just what it is. You know, it's a more popular asset class. You know, a lot of people also come for the intermarket work that I do, but like at the end of the day, they want a stock trade idea. It's just what it is. But the way that I approach the market from a global macro, from an intermarket perspective, by the time I decide that I want to buy Microsoft, 95% of the reason why we're buying Microsoft has nothing to do with the chart of Microsoft, right? And that, it's very difficult for people to understand that. We're buying Microsoft. The only reason we're buying Microsoft is because we like stocks as an asset class. We like U.S. stocks in particular. We probably like large caps. We probably like tech, right? Like, and then by the relative strength, positive momentum, by the time you get to all of those, there's a handful of stocks, and we're going to buy the one that offers the best risk versus reward opportunity. But the actual reason why we're buying Microsoft or whatever it is we're buying, shorting Micron or whatever, has very little to do with the chart itself. Like we don't start with a chart and then start drawing lines and counting waves and colors and moving averages. And by the time there's so many lines, you don't even know which one price is, right? That's not me at all. You know, by the time we get to Microsoft, it's because there's so much other stuff. Because there's a bullish divergence in Malaysia, right? You know,
that's great.
Right? So that's really kind of how I approach it.
So can you talk maybe a little bit more about, let's say you are looking at a chart of Microsoft or something like that. How would you describe your technical approach? You mentioned all the lines on there, I love, like that's not you. So what is you? How would you describe your approach to actually analyzing that chart? What's on the chart? How do you think of it?
Yeah, you know, it's really is just to keep it simple, stupid. Maybe because I can't, like, you know, when there's too much, I get confused and I just run away. You know, so like maybe I just need to focus on, I don't know what it is, but I'm not the oscillator junkie with like 27 momentum indicators. It's like, what, you're just waiting for all of them? I use one. I use an RSI. I use a 14-period RSI.
Yes.
I'm very multi-time frame.
Okay, good.
So everything's multiple time frames. You know, shout out Brian Shannon, right? Technical analysis using multiple time frames, right? Great book. Everybody read it.
Absolutely.
So if I'm looking at a chart of Microsoft, I'll start with the weekly chart.
Okay, got it.
I actually have the monthly candles in my monthly workbook as well because I consider Microsoft one of the bellwethers. Got it. Right? So I have them in that stock in particular. Right. I'll look at a monthly chart. I'll look at a weekly chart. Yes. And then I'll work my way to a daily chart. Yep. I've eliminated, I don't look at volume at all. Got it. You know, God bless you, Charlie Dow. Yes. Charlie, you didn't have derivatives 130 years ago. You didn't have black boxes. We can go on and on.
The world's changed a bit.
The world's changed, Charlie. Deal with it. Love you. So I don't look at volume at all. Okay. Relative strength is very, very important to me. Sure. Right? So if a stock is underperforming the market, there's a reason why it's underperforming the market. Yeah, right? You know, when, you know, stock market's gone sideways for 21 months until recently, right? So the stocks that we've been focusing on are the stocks that have been showing relative strength in that period, right? The way I look at it, my friend Joe Fahmy is the way he puts it. Think about like a beach ball underneath the water in a pool. You're pushing the beach ball down, but you can feel the pressure up against your arms. But when that pressure is released, the beach ball shoots up in the air. So think about the selling pressure in the market in a very similar way, sort of pushing the beach ball down. And when the selling pressure in the overall market is released, that beach ball is going to be the first one to shoot out. Right? So that's kind of, you know, I didn't make it up. This is Joe Fahmy.
That's good. Yeah,
it's great. It really makes perfect sense. Absolutely. So relative strength is very important. Momentum is very important. Yes. Because I talk to traders at hedge funds all the time, literally almost every day. Yeah. What are they looking for? Relative strength and momentum. That's right. Why? Because if they're buying a stock and it's underperforming all the other stocks in that subsector or whatever, they're going to get tapped on the shoulder. They're going to get called to the principal's office. Hey, what the hell are you doing? Why are you buying this stock? Yeah. So they need relative strength. Yes. They need momentum because if they're buying a stock and it's just sitting there, they're going to get tapped on the shoulder. Why are you buying stocks that are moving? Right? Yeah. So if these traders are looking for relative strength and momentum, why wouldn't we? So it just makes sense. And then obviously, if it's showing relative strength, there's a reason why it's showing relative strength. That's right. Right. And if it's showing positive momentum, you know, so those are the types of stocks. Again, depending on the market environment, right? Yes. Being specific to this one. In some cases, those are the ones perhaps we want to be selling. That's right. If we have other... Depends. Right. I
think what I enjoy the most about your investment process is it feels a lot like my own. As you're describing how you look at charts, we have a very similar mindset, which is why I think your work resonates so much with me and many others probably. Can you tell us just real quickly, I love to ask people what I'd call the worst call question. You've managed money, you've been an analyst, you've written research, done a lot of different things. Can you walk us through an example of where it was wrong? You were wrong, you missed it. Things went against what you said. How did you deal with that? How did you navigate through that? What did you learn from that? Can you give us an example, maybe?
Yeah, my blood pressure is rising just hearing you ask me because I'm already
preparing for this.
Yeah, because I already have post-traumatic stress disorder from this damn uranium trade. Okay. So anyway, I caught the uranium bug back in 2010, as did a lot of others, right? Yes. So I fell for that old trap. Right. So I'm like, yeah, uranium, hell yeah, right? I still know nothing about uranium. I probably know less now. Yeah. So I'm like, yeah, sure, uranium. So I was like nice and diversified, right? I had the uranium ETF, I had CCJ, and I had some little guy, UEC or something like that, right? Diversified, right? You got the ETF,
all of them.
the large cap, and the micro, right? Nice diversified. Nice diversified uranium portfolio. Yeah. And it starts working right away. Yeah. Those are the best trades. Yep. I'm the next Warren Buffett.
Perfect.
Come on.
Easy.
Yeah. I'm like, anybody can do this. Right. Fukushima earthquake.
Yes.
Oh, stock's only down 20% because of the earthquake. It's been, let's see, what year is it? We're in 2019. It's been 8 years. Yeah. They still haven't come back. No.
Yeah. Killed it.
Just the lack of discipline, the ego. Yep. I mean, just like go down the list. Check. Right?
All there.
So the ego, the lack of risk management, sort of the revenge trading, because I remember buying more. I think it was like on a Friday. Yeah. Every mistake you could ever make. Yep. Fortunately, it was very early in my career. Yeah. I had very little money. Yep. So what felt but it did the job where it felt like a lie.
It
still feels like
hurts.
a lie. It still hurts.
Yeah.
But I'll never forget that.
That's
and
great.
I get asked this question all the time. And, you know, we hear it all the time. It's your tuition.
Yep.
Right?
That's right. Yep.
They don't teach you this stuff in school.
Right.
You have to learn it the hard way.
That's right.
And if you haven't learned it the hard way, you haven't joined the club yet.
That's right. Yep.
You're gonna learn.
You're gonna learn.
You haven't learned yet. Oh, it's coming.
Get ready.
Get
right?
ready.
So, well, listen, we're almost out of time. I'd love to know. Last question is someone just getting started, just trying to get their head around technical analysis, market analysis, how to make sense of things. What advice would you give them, or what advice would you give a younger you trying to get started in the industry? What comes to mind?
You know, along the way, speaking of paying your tuition, until you realize you don't know anything, which I think you and I are now at, that whole period is like you're wasting it. It's not that you're wasting it, but like you're hurting yourself.
That's right.
By thinking you know something.
Yeah.
Oh, I read the John Murphy book, or I read half the Edwards and McGee book, so I'm ready. Right? Because, you know, they're not going to let you fly a plane just because you read a book about airplanes.
No.
You know, they're not going to let you perform open heart surgery because you read a science book. But they encourage you to trade, whether you read a book or not. Right? So, like, we have to understand that in this particular case, society is very much against us. The whole world against us. Right? As opposed to the other examples.
That's right.
I think that, you know, check your ego. You know nothing. Read every book you can get your hands on. Take, if you're a technician, take technicians out. Buy them dinner, buy them drinks, buy them coffee, whatever. Surround yourself. If you're in New York City, God bless you, because it makes it easier. But if you live in Alaska, make your way to New York every now and then. You know what I mean? Right?
Make an effort.
Because 95+% of everything you see me do, I learned from my predecessors or my current colleagues. I didn't make any of this stuff up.
This is great, JC. Where can people find out more about you and what you're doing? Where would you have them look you up?
Go to allstarcharts.com. You can follow me on Twitter at allstarcharts, Instagram at allstarcharts. Go to YouTube, allstarcharts, right? See what I did there? It's like
everywhere. Consistent, smart.
Yeah.
JC, thanks so much. This was a real pleasure. It's JC Parets, founder of All Star Charts here at the Traders Expo in Las Vegas.